traders, I'm back again with another video, and I think today's video will probably be one of the most important videos that I could probably put out there. So we're going to talk about what you see here, beyond frustrated. This is a member in my forum, and he is beyond frustrated. Okay, it says he's been studying Ichimoku for the past 6 months or so, and basically dating back since December, his last 9 trades have been losers. So basically, he says he's following all the rules, and his last 9 trades have been losers. So he's on a 9 trade losing streak, and that's not fun. And I've been there myself. And if you're a trader, you're going to have losing streaks. It's the same thing in any sport you play. You're going to have winning streaks and losing streaks, and you have to understand why you're having those losing streaks. So that's what we're going to do right now. Figure out why he's frustrated and having these losing streaks. And when your mentality is like this, it becomes a big issue. Here's another posting in my forum. This person is having a bad week. Okay, so he's 100 pips down for the week and feeling sorry for himself. And basically, we had traders where you would go for weeks on weeks with really good trades, nice profit, and you continually have that. And then all of a sudden you have this. Now you're starting to lose a lot of trades, and you're starting to give whatever you earned, you're giving back. Well, when this starts happening to you, such as this first posting, beyond frustrated and having a bad week, here's what happens, traders. It's not the indicators that you're using, but more so your mentality. It's the mentality that starts to take over after you have these things happening to you. And that's because 90% of this trading game is mental. If you don't have the mentality in order, it doesn't matter what you do, you're going to be a loser. Okay, so the trader that lost 9 in a row, or the trader that was down 100 pips this week, it starts to become a mental thing. And once it becomes mental, and it always is mental with us, because what do as humans? We run on our emotions. We're emotional people. Okay, so we cry, we laugh. There's things that make us cry, things that make us laugh, things that make us happy, sad. We get upset, we get angry. So we run all on emotions. So don't think that when you're trading you're not running on emotion, because I can show you all the emotions that you're using while you're trading. One of the biggest emotions is stress, and that's what's happening to these 2 traders that you see here. They have this losing streak, or they're having a bad week, and then it becomes stressful. The trading becomes stressful, and when the trading becomes stressful, then you're out of control. So basically, psychologist Connie Lilas, she uses a driving analogy to describe the 3 most common ways people respond when they're overwhelmed by stress. Okay, so the one is foot on the gas, and that's the angry, agitated person that's heated up, keyed up, overly emotional, and unable to sit still. So as a trader under this emotion, you're anxious to get into a trade. So you disregard the red lights and stop signs, and you just jump into trades because you're anxious, you're excited, you want to just jump into these trades. You've been on a losing streak, and now you're trying to get back what you lost. All right, so you're just jumping into these trades. You're not following your rules, you're not following your signals. You become anxious, and that's a bad thing for a trader. So that's one thing, the trader with his foot on the gas, ready to jump in any trade. All right, then you got the trader that has the foot on the brake. This is the withdrawn, depressed, or flight stress response. You shut down, pull away, space out, and show very little energy or emotion. So as a trader under this emotion, you stop trading because you're depressed because of your past bad trades. So the trader that lost 9 in a row, now he's probably just sitting there and not making trades, and maybe even gives up. Okay, we don't want that to happen. But then you have the trader that has foot on both the gas and the brake. So this is the tense, freeze up, stress response. You become frozen under pressure and you can't do anything. You look paralyzed, but under the surface, you're extremely agitated. So, as a trader, under this emotion, you see good trading opportunities and you want to make those trades, but you're now confused and you're doubting yourself and you're doubting your system. So you don't know what to do. You sit there, you want to make a trade, you got your finger on the button ready to click trade entry, but you just can't because you doubt your system, you doubt yourself, you're confused. And then if you do get into a trade, maybe you jump into the trade and then you jump back out. You don't allow the trade to move because you're so confused now. And we don't want this again as a trader. So let's talk about some of the emotions that we have. So we have fear. Fear is one of the emotions that we have while trading, and you could see you're on a nine loss streak, nine losers in a row, and you're fearful of your system. You're afraid to make trades. You're afraid of your stop loss. Everything becomes fear now. You're doubting your system. You're doubting if it even works. You're doubting your entry. You're doubting your stop loss. You're doubting your profit target. This is all emotional trading. You're fearful. You're doubtful. You're anxious. You're anxious to get into a trade. You're anxious to jump into the trade, just like the trader with his foot on the gas. And this is something that you don't want to have. When you're anxious, you get stressed out. As you can see what it says here, you have stress, you worry, you're emotional, you have panic attacks. Trust me, even traders can have panic attacks just from trading. Some of us may not go that far, but there's others that do. Some people have so much money on the line that, you know, it's really stressful to trade. And some who don't have as much may not feel these emotions. So when you have a lot to lose, you're going to have all these emotions. So then you also trust, no trust, distrust. You stop trusting your system. You don't trust it anymore. You don't think it works. It worked a few weeks ago, but now it doesn't work today. So you become desperate. And when you become desperate, past a certain point, there's nothing to do but give up, right? And then once you start having these big losing streaks and trading bad, you have a very, very bad week, you're 100 pips down. What do? Revenge. You revenge trade. That means you're trying to get back what you lost. So that what you do is you're chasing the market now. You're trying to get back what you lost, and you're not going to get back what you lost in one trade most of the time. There's no need to rush and chase the market and try to revenge trade. Get mad at the market because the market took your 100 pips and you got to get it back today. So that doesn't work. You can't revenge trade. You have to stay focused. You have to remain glued in on your trading system and follow your rules, and you remain the same. You always have to try to be consistent. And then you realize that your trading system is not the holy grail, so you go out to try to find that holy grail. But I'm here to tell you, traders, there is no holy grail. We all have issues with trading. We all have problems. We all have systems that work sometime, and then we find out that it's not working now, and then we have to figure out why. And I'm going to tell you why these guys are having troubles when we go to the live chart. But your holy grail is yourself. You're the holy grail. There is no holy grail as far as an indicator. There is no indicator that's going to win 100% of your trades. And it's all up to you guys. You are the holy grail of trading. And it all comes from your emotions. It all comes from trusting your system. It all comes from the stress, from all of that. And that causes you to be the holy grail or not the holy grail. You can put two traders together, three traders, 10 traders, put them all together and have them trade the exact same system and use only just maybe the euro dollar or just one currency pair, and have them all trade the same thing for a week. And I guarantee that at the end of the week, you'll have some that failed and some that are successful. And why is that? It's because the mentality of all these traders is different. Some of them are going to follow the rules, and some of them are going to break the rules. Some of them are going to jump in trades that they shouldn't jump in just because they're trying to get back what they lost. And some of them are going to follow those rules strictly. The ones that follow the rules strictly have a better chance of being successful, more so than the ones that don't follow the rules, that are trading more emotional. And yes, it's very hard to take your emotions out of trading. So the majority of people will be trading emotional. And after you find out that you do not have the holy grail of trading, what do? You divorce your system. Your system, it's over with. I'm done with you. Last month you were great. You were beautiful. You gave me over 1,000 pips. And now this month you're terrible. I cannot stand you. I don't want to be with you anymore because I am losing with you. All right. So that's what happens. You divorce your system. So basically, traders, what I'm trying to tell you is it's all mental. Everything that you're doing with this trading game is mental. It doesn't matter what system you're using. It doesn't matter what indicator you're using. It matters your mentality. And that's the one thing you have to get in focus first. You have to become more disciplined. You have to become more patient. You have to start following every rule. You can't break a rule, just the slightest of rules. Once you start doing that, then you start breaking more rules. You can't have revenge on the market. You can't chase after the market. But then, traders, you also have to understand the market. So even if you have the mental part together, which is probably the biggest part, then you have to understand the market. You have to understand what the structure of the market is, what the market's doing, and why your system works in that market or not in that market. So let's go to the live charts and look at this, and we'll understand why maybe these traders are having issues with the Ichimoku system right now. All right, so let's go look at the live charts. All right, traders, so let's look at these live charts and see what we have going on here and why these traders are having issues. But one thing is, look at me, I'm in a trade right now and I'm frustrated because I'm down 28 pips right now. Okay, and I'm more frustrated about what the market has done to me. Basically, I looked at this market and I can see the number one thing that we need to learn is the structure of the market. If we don't understand the structure of the market, we'll never understand which way to trade, which way the trade should be going. Okay, and that's part of following the trend or knowing if you're in a trend or a counter trend, and just the overall structure of the market, what it's doing. And we find that structure based off of fractals. If you're breaking bear fractals, you're in a bearish market, and if you're breaking bull fractals, you're in a bullish market. Okay, and then if there's a bunch of fractals in succession, then you're pretty much in a range. So you have to know that when you're trading the market, and we'll see those on some other charts. But looking at my trade, I'm kind of frustrated because I looked at this resistance of the Cad Yen here, and I'm on the daily time frame, New Zealand dollar yen. We bounced off of this Cad Yen, and then I had my entry level here. You could see once I entered the market, the price dropped about 115 pips for me. But then it came back up and closed here. So this is a daily candle, and I'm looking at the market, and I have to give the market a chance to do what it's supposed to do. So I'm counting this as a pullback, and then want to see if the market's going to continue with the downwards move. Now, if we break this Cad Yen, I have my stop loss a little above that level, and that'll mean we break this fractal level here. If this becomes an actual fractal level, and you'll have this candle closed by then, you'll know if this is an actual fractal level. So if this becomes an actual fractal level and we break that level, then pretty much you could see the structure of the market has changed, and our trade should change also, which means we would be out of this trade. So I'm losing this trade, trader. So I lose trades too. I lose a lot of trades, but I win a lot of trades also. But the thing is about not about my winning or losing, it's about my risk control. I can lose three trades and then maybe win one and still be profitable. Okay, it's because the amount of money that or the amount that you're sacrificing or risking. You always know your risk, but you never know your profit. So if you know what you're risking, I know that maybe three trades I can lose. Each trade I'm going to lose 30 pips, 60 pips, or whatever it is per trade. And that's going to be part of my money, my risk management, controlling my risk management by not allowing more than 2 to 3% max. of my capital to be lost in one trade. And if you lose that in a trade in a day, then you should probably stop trading throughout that day and wait for the next day. And traders, don't jump back into trades that you see. If you see a trade that you thought was going to work and you got stopped out, don't get back into that trade. If this trade doesn't work for me, stops me out here, I'm not going to get back into the trade no matter what it does, because now the market has me basically, I'll say, confused, because it's not doing what I expected it to do. If the market doesn't do what you expect it to do and it takes you out, stay out. Don't get back in. Wait for it to do something and prove to you what it's really doing, and let it tell you what it's doing. All right, so I'm losing this trade here, and we'll see what happens with this trade. Based off of this trade, I see a downtrend. The market's moved down. Then we had a pullback here, pullback to this Kijinsen, and now we should look for price to drop. Now, another thing that we're having issues with, traders, and let's go on to another pair. All right, we're looking at the Cad Yen here. Knowing the structure of the market is very important, because now we can see the market was breaking bull fractal, so it was moving higher. But then we got to this point, and if you're trading in this point and you're losing, look back and ask yourself why. You cannot trade this. Okay, this is a 4 hour chart, so it's a little different here, but this is all over the place. This is um, a volatile market, because you're up, down. So nothing really consistent. This is really volatile, and it's hard to trade a volatile market. Ichimoku is made for trading a trending market. Therefore, this market's not trending. You should not be in this trade. Okay, you should not even be attempting to trade this. So if you entered this maybe one time, you got stopped out, and then you look back and see what it's doing, you say you're not going to enter until you see it break this level up here, and then you see it doing this some more and you enter again. Then traders, that's not really smart, because you could see what the market's doing. There's no structure to the market. It's all ranging. The structure is a range. It's not moving higher or lower. All right, so it's a lot of volatility, and it looks like probably low liquidity, which is not a good thing either, because you're not going to have a market that's really moving. You're going to have a market standing still, pretty much like it's doing right here, not doing anything. All right, so you want to look at what you're trading. If you're in a range and you're trying to trade Ichimoku and you can't see that you're in a range, that's going to be a problem for you. You're going to get stopped out a few times, and then you're going to say the system doesn't work. Yep, it doesn't work, because it doesn't work in a ranging market, pretty much. So what I'm looking at here, and I'm not even attempting to trade this pair, but for those of you that really want to trade this pair, you would have to wait to break this level here. You're in a range, you want to get above the level, or you want to break out and come below the level, and you'll look for a Kumo breakout then. But being that you're above the cloud and you want to trade long, then you need to wait. You need to be patient. Sit here and wait till the market starts moving again. And you'll know it's moving once it breaks this level. Therefore, once it breaks this level, what does the market like to do? It likes to come back to fractal. So let it break this level and then let it come back, and then we can look at getting into the trade. So we have to be patient. If you're trying to get in this, there's nothing to trade here. All right, so that's one reason there. Let's look at the euro yen. See the exact same thing. The market was moving up, breaking bull fractals, but then we stopped. We ceased. It looked like we were going to bounce off of this Kijin as support, and then we pretty much doing nothing. Low liquidity, no, pretty much kind of volatile, but really nothing happening here. So to enter this trade here, anywhere in here, and you're not winning and you're stopped out, or you're just sitting in a stale trade, you have to understand again, this market's not trending. You have to understand the structure of the market. If you don't understand the structure of the market, you're going to enter this trade and enter this trade. Now, the first time I could see entering this trade, but after you see that it's not moving, then you have to set a level where you're going to say, I'm going to wait to see this market move. So I want it to break this level, or I want it to break this level. Okay, and then I'll know that it's starting to move. So you want to see it break levels to tell you that it's moving, because now it's pretty much doing nothing. And we've already looked at three pairs that are pretty much doing the same thing. So look at this fourth pair, pound dollar, 4 hour time frame. Trading all back here would have been very hard to do. So maybe you would have missed this opportunity. So if you missed that opportunity, and the reason we couldn't trade this here back here is because we're all over the place. It's all in a range, and you have to see this, guys. You have to see this. And if you don't see this, you're going to get stopped out. You probably get stopped out at least 3 times in here trying to take a trade. And then the one trade that does work, you're probably not going to catch because you're so confused about what's happening to the market. Therefore, you should have never traded again after you got stopped out. You need to see what the market's doing. Let the market really tell you it's doing something. All right. And then you could get into a trade. So you missed this opportunity, but then you say, oh, the market's moving now. So now you're going to start looking for a trade up here. We don't trade up here as Ichimoku traders because we're too far from Kijinsen. So it doesn't matter what this market does up here. If you don't follow the rules, there's going to be another attempt for you to get stopped out because the market likes to pull back to Kijinsen. And if you're trying to get into a trade here, the market may pull back to Kijinsen, you'll get stopped out. So that's another thing that you have to look at. You have to know how far away from Kijinsen you are. You have to look at the structure of the market. These are things that you have to know more than just looking at Ichimoku. And it doesn't matter what system you're using, you still have to know the market structure. All right, so again, the market moving higher, and then look what it's doing now. Nothing. Look at the volatility of this market, way down here, then shoots way up here. This is going to hurt anybody, pretty much. This is pretty hard to trade. And then if you did get into a trade here, you're probably sitting still with very little profit. Look, nothing really happening. Again, another pair that's pretty much in a range. This is why I'm not really in any trades this week. The only trade I took was the one trade, and I didn't see anything else. So my members are probably wondering why I haven't sent them any trade alerts. Well, there's nothing to be alerted to because the market's not doing anything, and I'd rather send you nothing than send you something that is something that I'm guessing at or hoping that it moves. I want to send you something that's more solid, higher probability trades. And this is not a higher probability trade because we're in a range here. And again, a lot of people probably try to attempt to trade this stuff. And if you're trading it with Ichimoku, you're going to fail. All right, so that's pound yen, 4 hour time frame. Let's look at the euro pound. Again, another pair. This whole week, looking at these pairs has been disastrous. They all look terrible. They all look bad. And it's hard to trade this stuff. So let's see what's happening here. All this time here, very volatile market, all over the place, hard to trade. You can't tell the structure of the market, and if you look at it, the structure basically is a range because look at these fractals all together. When you have fractals all tied up together like that, you're pretty much in a range. So again, another pair hard to trade. No matter what we're talking about, this is very hard to trade because it's so volatile. The price is high, the price is low, the price is high, then low. So knowing this again, traders, is going to keep you safe from entering the trade or entering a bad trade. We want to see some kind of defined movement before we start getting into a trade, right? Again, we're going to another pair, Aussie yen, 4 hour time frame. I've showed you 3, 4, 5, 7 pairs so far, and nothing really happening with any of these pairs on the 4 hour time frame. And they're pretty much in a range and pretty volatile. Very little liquidity on these pairs. Look at this pair here. This is very volatile, hard to trade. This stop you out, drops way down here. This is just something you have to see, and if you don't see this, you're in for a lot of losses before you get that one. And taking all these losses, your one trade may not cover all your losses. So you have to look at the structure of the market. You have to look at the structure of the market, and you have to know the structure of the market. You have to know if you're in a trend. You have to know if you're in a range. If you can't tell that, then you're going to continue to get whipped out of these trades because you're going to continue to use Ichimoku when it's not working in this setting here. All right, so you have different guns that you use for different times that you want to shoot. So if you're going hunting, You're not going to use an elephant gun to shoot for rabbits, okay? So it's the wrong gun to use. An Ichimoku is the wrong tool to trade in this market here. All right, you're trying to build a house. You're trying to put something together. You have to use the proper tools. If you're using Ichimoku to trade this, you're using the wrong tool. And the way that we know is this range, just looking at the market structure. So what we need to wait for is price to start moving. And how are we going to know that? Let's see it break some of these fractals up here. Let's see it close above these fractals. Let's see it close below this fractal. And then we'll know the market's probably starting to move. We'll see the liquidity increase, and then we'll be able to trade this market using Ichimoku or using our fractals. We're going to look at two more pairs here. US dollar yen. This pair is my worst pair to trade. I always have issues with this pair no matter what, okay? But look at this long wick on this candle here. And then look what the market's doing here. It's not doing much here. There's no trading opportunity here, guys. So I've showed you guys a bunch of pairs here, and there's no trading opportunities. 8 pairs right now, and really nothing happening. So, and it's been this way the whole week. So that's why you're having a bad week. That's why you're beyond frustrated, because the market's not doing anything, but you're looking for it to do something. You're expecting it to do something that it's not doing. You have to look at it and see what it's really doing and know what it's doing. Understand the structure, and then you'll know if you should be in a trade or not. And here again, same thing. Look at this. This pair is disastrous right now. Nothing really good to trade here. Even this breakout, being that it's Friday, I surely wouldn't take this breakout. But if this breakout works, then maybe this pair starts moving. But pretty much this pair is all over the place, very volatile. So this is a pair you probably want to look at and say, I don't want to trade it. But if you do, you're probably going to be in for a bunch of losses here. Okay, so this is probably the reason why a lot of traders are having issues this week, because the markets are very volatile. All of these pairs have been very volatile. The liquidity is very low. They're pretty much in a range, and if you're using Ichimoku, it's not for this type of a market setting. Okay, it's more for a market doing this, trending higher. And we can find a bunch of opportunities here. There's an opportunity there, here, another opportunity here. So we can find opportunities when the market is trending, but when the market is doing this, I can't even show you one opportunity here. Okay, so you have to learn that and understand that it's more than just trading your signal. You get all these signals, but you have to understand the structure of the market. Very important. And we see the structure of the market based off of our fractals. We teach this in the course about the fractals. So trading fractals are understanding the structure of the market using the fractals as support and resistance. This will all help you to understand if you should be in a trade, if you should be out of a trade, or if you should just let that pair go and wait and look for another pair. All right, so traders, that's it. I hope that you guys can, the traders that are having issues this week could just sit back, stop, refocus, and then just look at the markets. Take Ichimoku off your chart. Look at the market structure based off of the fractal levels, the fractals, and box that market in like I have here. If you're in a range, then you probably don't want to be trading that, okay? And if you are in a range, there's ways to trade a range, but surely not Ichimoku, okay? So that's going to be a reason why you're having issues. So hopefully this video will help you a little bit, to understand your mentality and the structure of the market. Two big things about why you're probably losing this week. This has been a very bad week, and I can understand how you guys feel. So hang in there. Ichimoku does work. It's very good. If you married it and you love it, don't not like it now, because again, it's going to start looking pretty again. But right now it doesn't look so good based off of what the market's doing. But the markets are tough to trade with any trading system right now, because very low liquidity and very high volatility. Just hard to trade that kind of a market. We want to see ranges. I mean, trends. Sorry about that. When we see trends, we like that. All right. So, traders, I'm pretty much done, but hopefully this helps somebody. And until next time, God bless.